The Bitcoin game has changed. Today, hodlers will never need to sell again. The rules of Bitcoin has evolved. Today, long-term hodlers may never need to sell their Bitcoin. Major banks worldwide are building the infrastructure to make this possible. Soon, selling Bitcoin could be seen as one of the biggest financial mistakes of this generation. Wall Street's way has always been buy low, sell high, but Bitcoin doesn't follow traditional rules. Selling doesn't just lock in profits, it severs your exposure to future upside. Imagine buying Apple stock in the late 1990s, doubling your money, selling, and then watching it rise 1000x over the next 25 years. There's a costly lesson on impatience. With Bitcoin, it's worse. You lose potential gains and trigger a hefty tax bill from Uncle Sam. So, what's the smarter move? It's the strategy used by the wealthy for decades: borrow against assets instead of selling them, and avoiding taxes while building generational wealth. Enter Bitcoin Whole Life Insurance. Instead of selling Bitcoin for cash, you place it into a tax advantage whole life insurance policy and borrow against it. Your Bitcoin serves as collateral. It's safe, appreciating, and even accumulating more sats, while you access liquidity for spending, investing, and emergencies. It's like refinancing your home without selling it. You unlock cash without losing ownership. And unlike traditional loans, there's no required repayment schedule and no margin call risk. Think of Bitcoin as a prime rental property. Savvy investors don't sell when they need money, they leverage it. The asset appreciates, generates income, and provides ongoing credit, or in Bitcoin's case, grows in value. Bitcoin hodlers can now adapt to this elite strategy. Banks like Fidelity and JP Morgan are preparing the groundwork, treating Bitcoin as premium collateral, just as they've done with US Treasuries or gold for decades. But how does it work in practice? Suppose you own one Bitcoin worth of $125,000. A bank might offer a loan at 9% interest, secured by your Bitcoin as collateral. Alternatively, you can place it in a Bitcoin whole life policy and become your own bank. Borrow at 3% interest with no fixed repayment schedule, no margin calls, and your Bitcoin continues compounding. You get cash in hand without selling, no taxes triggered, and full exposure to upside. Use the loan to buy a cash flowing rental property, start a business, or invest in assets yielding more than 3%. Fast forward 2 years, Bitcoin hits $250,000. Your original Bitcoin now exceeds the loan value. Repay if you want, or let it deduct from the policy's death benefit. You enjoyed liquidity, avoided taxes, and grew net worth. Now you are having your cake and eating it too. This isn't too good to be true. It's the cheat code billionaires have used forever. Billionaires rarely sell appreciating assets. Elon Musk borrowed against Tesla shares to buy Twitter. Donald Trump leverages skyscrapers rather than selling them. Why? Because selling incurs taxes and caps growth. Borrowing provides liquidity while the empire expands. Bitcoin fits into this blueprint perfectly. It's liquid, scarce, global, and ideal collateral. Average holders can play the same game. Now let's look at the broader market impact. When holders borrow instead of selling, Bitcoin gets locked up as collateral, reducing circulating supply. Multiply this across millions. The exchange supply shrinks dramatically. The demand rising, prices surge. This is already underway. Long-term holders control 70% of supply. Institutions are scooping up the rest. Companies like MicroStrategy exemplify the loop. Borrow cheap dollars against Bitcoin. Buy more Bitcoin, repeat. Their balance sheet is now a Bitcoin vault, funded by bonds and debt. Institutions think in decades. They accumulate, never sell. Mutual funds, pension funds, and sovereign wealth funds will follow. The insurance companies are leading with Bitcoin backed policies. Banks aren't embracing Bitcoin out of ideology, they're chasing profits. Having watched Coinbase like billions, giants like JP Morgan, Goldman Sachs, and Fidelity want in. To offer Bitcoin services, they need Bitcoin itself, driving them to hoard and compete with retail buyers. Picture this, it's 2026. Your friend takes 0.25 Bitcoin to Chase Bank, endures bureaucracy, and gets a $100,000 loan at 9% interest. You, with a Bitcoin whole life policy, call your insurance company and $100,000 is wired instantly at a 3% interest. Borrow from yourself, invest, repay, maybe, all while Bitcoin doubles. Why sell? It would be financial malpractice. Bitcoin involves the new foundational asset, like gold or land, leveraged, not liquidated. Here's the harsh reality. Only 21 million Bitcoin will ever exist. Whales have accumulated over a million in recent years, leaving fewer for retail. Most people won't own a full Bitcoin. Even zero point 0.1 Bitcoin may become an unattainable luxury as coins lock up in collateral or get lost. So here's the playbook for everyday hodlers. Accumulate sats relentlessly. Never sell. Place Bitcoin in a whole life policy for optimal collateralization. When needs or opportunities arise, borrow responsibly. This builds generational wealth without sacrificing holders. Using Bitcoin as the ultimate wealth tool it was meant to be. The old trading model is dead. The new way? Buy, hold, collateralize. Over 60% of Bitcoin hasn't moved in a year, and banks are racing to build a lending infrastructure. The big players will buy and hoard forever. The smartest Bitcoiners will hold, leverage, and live off their Bitcoin as it compounds indefinitely. Bitcoin whole life insurance enables this in the most efficient way. Secure your future, secure your legacy with Bitcoin whole life insurance.